would like to start with WTI oil today. We had the API report yesterday. We had another inventory, but oil is moving up. Many participants wonder why this is the case. Well, we've had good developments over the past few days surrounding Brexit, mainly, and also the US-China trade war with a potential deal next month. Now, as with both issues, sentiments seems to be shifting very often anyway, so I would expect latest moves or directional biases to be reversed at any point soon. Now, on the oil, we've also had a ISIS attack on an Iraqi oil field, and that means that there is risk or fears of oil disruption, and that is also why oil is going to the upside. Now, the thing is, from a technical perspective, I don't see oil really moving above the 55. This is because we are most likely going to see that level actually being a good resistance and moving down for wave 3. Now, we're expecting the EIA report, so although I'm not expecting that to go over the 55, it could be an option, and in that case, we'll probably see that becoming more of a complex pattern and moving higher up to maybe the 57, 55, 71 levels or so, which is the low of the minute wave 1, okay? We could even go higher, but the last stop would be around the 58. To be honest, though, and from a technical perspective, this correction is looking quite corrective, to be honest, and looks like we're going to see a last move to the upside, either creating a false break above the previous high, okay, or failing to even get break-even stops out, and then, of course, moving low. We expect to see this trend line penetrated, and then a possible retest would be in play, could weigh on prices, and then we should be moving down for wave 3, minor, then 4 and 5, which has a longer term at intermediate wave 3 around 42 levels. Okay, now the RSI and the MACD both give us a bearish signal, and that is within the most recent formation. Now, the other pair I wanted to look at is, of course, the commodity of gold. Gold is also have been moving surrounding the latest news on Brexit and trade war. Now, the thing with gold is that yesterday it really moved. There isn't anything bullish, to be honest, to add onto the safe haven sentiment, and that is because the UK Parliament rejected the Prime Minister's Brexit timetable, despite the fact that they did accept his Brexit deal. Obviously, until the 31st, legislation won't pass. They cannot, they don't really have time to scrutinize. So for that reason, there is a risk of election, and that makes the yellow metal bulls a little bit more cautious, because whether we're going to have an exit on the an exit is quite possible. Yes, we will have an exit, but whether we will have it at Boris Johnson's timetable on the 31st or not is what is going to make a difference on gold. Now, from a technical perspective, gold is also on 3 minor, and we're going for 4 minor. We talked about this probably becoming a more complex correction. We've had a zigzag, and now we've had wave 1, 2, 3. The wave 4 is a triangle, and we're expecting a wave 5. This is likely to complete wave A, okay, correction. Then we should receive a B, and then the C level, which is going to be the end of this complex pattern and the end of minor wave 4, and then we should be looking for prices to move higher. The 1536 is a very important level, as you may see for yourself as well. Now, the thing is that since we are in this complex correction, potentially, because that could indeed be like, you know, No, actually cannot, because we cannot have a triangle on the second wave. So forget about it. So what will happen here, we could see a flat correction, right? So the Y wave could be a flat with 1, 2, 3, 4, 5, ending around the previous low of 1450 or so. Then we should see price moving up to correct to be around 15, over 15, around 1513, and then another move to the downside, either to the previous low or a little bit lower. And here is where we can look for prices to start moving up, anywhere between 1446 and 1440 or so. But of course, we could have further slides. We will be revisiting this on a weekly basis anyway, so we go as the markets tell us.